Heinz and Kraft merged to become the 5th largest food company. Henry, what were you seeing in terms of options flow on Kraft up into the merger? Did the options market know anything?
Well, it's interesting. Whenever we see a deal, really the very first thing I do that morning is like, okay, was there something yesterday? There wasn't. It actually was really dead for the last few days. But then when I looked a little bit longer chart, I was like, there's a bump on March 10th. And I dug into it a little bit, and it was a big bump. And it was, total call volume triple the normal, okay, nearly 15,000 contracts. June 67 half strike calls bought for 70 cents was kind of the biggest. In fact, a 10,000 lot.
Right.
Okay, those are over $14 this morning on this deal. Okay, so that's a $14 million winner on $700,000 of premium that somebody spent. It looks a little bit fishy. I mean, it was, it didn't happen the day before, and it wasn't short-term, weeklies or something like that. That is really just kind of like the biggest smoking gun you can see. But I would tend to look at this and say somebody seemed to know what was up. Now, I looked back even a little bit further, and earlier in the month, there was a bump on, I believe Goldman upgraded a bunch of food companies.
Right.
And the day that we did see that, the 10,000 June 67 halves bought, there was also some flow in Pepsi and Campbell's Soup. In fact, I think we were calling it like Buffett Day because it was a bunch of Buffett-y names or names that that have been associated with the kind of companies that Berkshire likes to take. But when you're looking for kind of speculative flow that seems to tell you a lot, you're looking for unusual size, and this had it. You're looking for implied volatility spiking, and this is what happened. And you're also looking for the put call skew to flatten up, which basically just shows you the demand or the focus is on the call side rather than kind of those insurance.
So we're going to keep paying attention to the consumer staple space because it really has been active for M&A activity because they're growing via acquisition, not necessarily organically. Let's look at a couple names quickly that also triggered your brain in terms of what's that options flow telling us.
Right. As the market calmed down after Fed week and volatility came in, that's actually very helpful for people that are kind of want to use options for leverage because you don't quite have the theta, paying so much for the options. A couple names that hit our radar this week, Pfizer over the last few days, which has been interesting. A lot of heavy call buying. No real news on the tape, but it's adding up, and it really does. Actually, Bristol Myers this morning also had some funky call buying, so it's possible something's kind of brewing in that health space.
Well, it could be off of Merck as well, following their announcement, right?
And then eBay, very short-term calls yesterday, saw a little blip, which was interesting. And we even saw some bullish flow in kind of the converse, which is Lifelock, the ticker's lock. They do identity theft prevention. Big put seller yesterday. So. And it was about $1 in the money, or $1 out of the money. So it's it's another way to bullish to sit, put on a bullish position and say, I think this is a safe trade, or maybe I'm willing to take a big position in the stock. In that case, it's a pretty thin name. So.
And to wrap things up, how can a retail trader use institutional flow? Because by the time you actually are made aware of it, the move has happened.
Right. Well, the Kraft case is really interesting because it was 15 days ago. The stock did not take off the next day or the same day. So in a lot of cases, this hot, unusual option activity, which some traders in chat rooms tout as this great kind of trading opportunity. It's tough for retail to jump into that unless you're in a chat room and you're bouncing ideas off of each other and you really do have real-time tools. But in something like Kraft, where it was a big trade and there was a lot of time to kind of digest, this is interesting. By this morning, the June 67 half calls had 20,000 contracts of open interest, biggest position in there, all basically created over the last month. There's plenty of time to kind of do your homework and say, gee, somebody put in a really big, somebody's opened up a big position and it's $6 out of the money. And and if you kind of combine that with, this is what I'm always telling people is option flow is very important, but it's not the whole story.
Right.
But it's a very valuable add-on to other analysis. If Goldman upgraded, Kraft a month ago, there's somebody who thought it was a decent value stock. Add that with unusual call volume and kind of the other signatures, volatility lifting, skew flattening. And in this case, there was plenty of time to act on that. So my answer is, if you're willing to do your homework and dig around and try to understand as much as you can and what's normal, what's unusual, there's time for
But
these
it can
kinds
also
of trades.
signal a derivative play in the space. So if you saw the activity in craft, you can look at a Smucker's, look at other names, for example. So especially
Absolutely.
if it's a sector play, for sure.
Absolutely.
Okay, thanks very much, Henry. For The Street in New York, I'm Jill Malandrino.